Hey guys, Joseph James here, back again with your nightly newsletter brought to you by theschooloftrade.com. Today was October 6, 2009. Before we talk about the trades we took today in the room today, I want to remind you guys about our free resource online. Go to youtube.com/School of Trade. And when you're there, guys, please subscribe to our channel. That way you're always getting the updated videos. And please rate and comment on this video. Let's take a look at our trade room totals for today. Had another great day in the market, guys. Only took 2 trades today. Went 2 for 2. Saw lots of patterns develop. Went over our rules plenty of times. We really did a good job at engaging in the market using patience, and as you can see, it paid off here as usual. 570 this week is our total. This brings our monthly total here to 1610, right? 1610 here the month, 570 for the week, and of course $410 for today. We'll keep you guys posted throughout the month of October. Term of the day today is layers of risk. Now, these are used to describe the many different elements that contribute to the risk of a potential trade. We talked about layers of risk today in the room, and of course, it's something we use every single day for every trade we take. And you'll hear me say things like the chop zone, slow price action, and maybe a stutter step pattern are too many layers of risk, meaning that, of course, the risk in the trade is a lot higher, and we'll avoid that trade. Very simply put, guys, we use our entry rules to identify these layers of risk. We avoid trades with multiple layers of risk, and we take the trades with no layers of risk. Now, one of the great things about this term, layer of risk, is that we can actually use them. And again, we're using these rules, right? It's different examples of these layers of risk could be the chop zone, slow, choppy price action, time of the day, location, slope of the trigger line. Guys, lots of examples of what could potentially be used as layers of risk. But one of the great things about this is it allows our members to be, whether it be conservative or aggressive with their trading. As you guys know, different traders have different personalities with different risk tolerances. Those different personalities and different risk tolerances mean that we need to be able to have a method that allows both conservative, right, low risk tolerance traders, and aggressive or high risk tolerance traders. We need to find a way for them to both trade equally. In other words, we need to be able to trade with our methodology, whether you want to take aggressive trades or less than aggressive trades. And of course, using these layers of risk is a great way to identify the trades to take for you. Now, if you're an aggressive trader, you can take 2 or more layers, right? So you could have slow price action and have not very much slope on the trigger line, right? You could have 2 layers of risk. Now, that's going to give you more trades every day, but you'll have slightly higher risk in each trade. A conservative trader, of course, we will stick to below 1 layer of risk. So we can have 1 layer of risk. That means one thing outside of our rules can be setting up. Additional to 1 layer, though, I'm not going to take that as a conservative trader, right? That's left for the aggressive traders. With this conservative traders, you're going to take fewer trades every day, but each trade, of course, will be much higher potential because lower risk, all of our rules line up if you have less than 1 layer of risk. And again, we're going to use this term layer of risk to define whether or not you're an aggressive trader or conservative trader, when you'll be trading and when you'll be sitting on the sidelines. So depending on what your obstacle is, if you're an over trader or an under trader, we can use things like layers of risk to dial it up or dial it down. Again, guys, it's called layers of risk, and we go over all this stuff live in real time. We'll give you guys all the information you need about in our trade room. Our live trade room opens on Monday at 7:30 a.m. On Tuesday through Friday, we open up at 2:45 Eastern Time for the Euro session, 7:45 Eastern for the U.S. session. Tuesdays and Thursdays, we do free webinars at 11:30 Eastern Time in the trade room. And guys, if today's your first day with us here in the trade room, grab a copy of the beginner's course. The beginner's course is going to be your who, what, where, when, and why. Give you guys all the information you guys need to know about how to trade with us as part of your free trial. All right, guys, let's take a look at some trades we took or potentially didn't take here. Now, we started our morning off at 3 a.m., very slow and sluggish. We had to wait until about 8:30, 8:45 to really see some volume come into this market this morning. Great example here, guys. Our first potential trade of the day was a breaker short just after 9:20 here, so just before that 9:30 U.S. Open occurred. But 20 minutes past the hour here, looking at this breaker short, we were waiting for it to set up. We knew, of course, after 9:15 it was going to be a little bit higher risk, but then we started seeing this pace of the tape indicator starting to decline over here. And again, before we jump into this breaker short to the downside, we shift our focus to our pace of the tape indicator, lower right-hand corner. And you can see there, very simply, we have decreasing pace of the tape, which you can see that goes from green to yellow, back down to red. And of course, that means to be aware. When we see decreasing price action, decreasing pace of the tape around our point of entry, we know to be aware of that area. So, of course, we stayed away from it. It came right back above us and would have stopped us out. But we were standing on the sidelines, safe and sound. Now, let's talk about some of the trades we did take this morning, right, guys? Now, I will give all the credit, though, to our rules and our patience and our discipline, because we really did a good job today at not jumping into trades prematurely and to really focus on using our rules to get in and get out of these trades. We took 2 trades here. First trade today, guys, was on the Russell. So great, obviously, to see the Russell. Second trade was in the gold. So we didn't take any crude oil trades this morning. So we're great to see some opportunities in the Russell and the gold this morning. First one here in the Russell was at 940. This was a breaker long. Entry here was at 94.9. Now you'll see here, guys, we have that blue line. That swing high there, just about 94.6, 94.7. Had to wait to get above that line, confirm the move was happening. We call that follow through, and we got in there at 94.9. Took our first profit target at 4 ticks, took 2 off at 4. We took a target off at 8, and a final target for our runner off at 9 ticks. Okay, so add them all up. There's your 25 ticks. 8 from the first target, 16 as far as the second target, and then add 9. There's your 25 ticks there on that first winner. Now at $10 a tick, there's $250 in your pocket there, guys, just after 9:30. So a great way to start off our morning. Now the next trade, our final trade of the day here, was at 10:29 on the gold, symbol GC. This is a 1209 contract here, guys, on the gold. I choose to trade NYMEX gold just because it has more volume than the CME gold. But basically, relatively same premises here. 10:29 just for 10:30, a breaker short, guys. Now again, you can see that blue line there. We marked our swing low, that green arrow, and then we waited for a couple ticks below that swing low to get involved. So entry here was at 39.4. We took targets here at 4 ticks and 8 ticks, got bounced out at our point of entry after we saw our first 2 targets filled. We took 4 ticks off the table, times 2 contracts is 8 ticks, and then the second target there of 8 ticks, that brings us to 16 ticks there total. Guys, I will take 16 tick winners all day long, right? $160, that's $10 per tick. $160, add that into your $250, and there's your $410 that we got here on just 2 trades, guys. Now, to trade with us like this, all you would need to have is a $4,000 account. That's it, a $4,000 account. To trade crude, you got to have $1,000 a contract. So 4 contracts, trade all the markets we trade, guys, you need a $4,000 account. As you can see, guys, today, we brought in $410 today on only 2 trades. That's a 10% return in your account. So, guys, come out and join us, guys, tomorrow morning. Live trade room opens up at 2:45 a.m. Eastern Time. We'll show you guys how to use our rules. We'll show you guys all about our trade patterns. We'll show you guys everything you need to know to trade along with us. And, of course, don't forget about the free 3-week trial so you don't spend a dime. You come out and see this live in real time. Want to grab a copy of the beginner's course, right? The beginner's course is recommended for all free trial members. And guys, please remember to subscribe to this YouTube page and please rate and comment on this video. If you want more information, guys, about lifetime membership, that's right, lifetime membership. No monthly fees. You own the indicators, guys. It's all in your control. Drop us an email, sales@schooloftrade.com. Make sure you guys check out our free trial. And as always, guys, my name is Joseph James. Hope the video helps. We'll see you guys tomorrow morning in the trade room. 2:45 we open up. Bye-bye for now.